it's that time of the year where budget is, of course, on everyone's mind. So let's try and deep dive and figure out what the key expectations are. Aurodeep Nandi, India economist at Nomura, joins us on the show right now. Hi, Aurodeep. Good to be speaking with you. Well, you're expecting that not only the government will manage to, be on its glide path and consolidate to the level of around 4.8% of GDP in terms of fiscal deficit, but you're expecting a 4.4 figure in the coming year. A bit surprising in the sense because people are expecting them to come out with a lot more dole-outs and freebies and perhaps just spur consumption. What's your thesis?
I mean, look, for FY25, there is a lot of savings that's happening on the capital expenditure side, right? So the government is budgeted around 3.4% of GDP. We expect it to be below 3% of GDP. So there is a saving that is happening this time, plus income tax collections have been pretty good. So FY25 seems to be a year where they will undershoot the fiscal target. Now, for FY26, the finance minister has a choice, right? Now, the communication that the guidance that has been given so far is that India is committed to bring its fiscal deficit down to below 4.5% of GDP. This was reiterated in the July budget of the new government. The question that one asks is, all right, can this be achieved while supporting growth? And I think it's important to understand that there needs to be a balance of both. The government has created a credibility, a fiscal credibility by maintaining this discipline for so long. And we're just at the finish line now. And also another thing to remember is that beyond FY26, we actually don't have a glide path, right? The government has said that we are going to move to targeting debt as a percentage of GDP and not fiscal deficit. So we are close there. The question is, can you still support the economy with a 4.4% of GDP number? 2 points there. One, yes, you can give concessions around income tax. You can have a strong public capex figure, which and then you sort of instruct your departments to spend that amount of money. You can give SOPs for manufacturing, and we can discuss those. So those are possible without straying too far away from the fiscal target of 4.4% of GDP. And also, I think macro stability has to be important even in these situations, which is broadly where we are coming from.
All right. Hi, Aurodeep. This is Shrishti also joining in. But when it comes to common man, budget definitely means some tweaking in the tax rates. And this time, given the slowdown in the consumption, there yet again hope spinning in terms of the tweaking of the tax rate slabs. Help us understand that what you are building in with respect to this. And given the slowdown in the consumption, is this the need of the hour for the government to go ahead and do this?
Sure. I think just sort of to harken back also, because this is linked to the first question, which is that, you can budget in 4.4% of GDP, but if growth actually weakens, which is, by the way, our base case, we expect FY26 real GDP growth to be 5.9%. Versus 6%, which we are expecting in FY25. So tax collections will again be hit, and so fiscal deficit, as it is, would then pick up. Now, specifically on the income tax side, I think there is a lot of middle class angst, and this middle class, which we are talking of, is probably people who earn, say, a lakh or so a month, who are facing the brunt of higher prices and higher taxes. We'll only get to know once the finance minister announces, but I think the sort of news reports that we are getting from government sources is that they're considering that for the top bracket of 30%, the income slab of 15 lakh may be increased to 18 or 20. The 20% bracket may also be increased. So essentially giving some relief there, giving some relief on the standard deduction side. And also the finance minister last time mentioned about the direct tax code, right, which is supposed to simplify taxation, which is supposed to reduce the amount of litigation between government and taxpayer, which, ease of doing business is also an important part of taxation. So that's broadly what we are expecting on the tax side. Look, this year personal income tax is far outpaced corporate taxes. So this is an important source of government revenues. So the government also has to be mindful of that dynamic while offering concessions on income tax.
Tightrope definitely for the government, but Auro, what's the sense as far as the corporate taxation bit is concerned? Because that's what will perhaps bring back some mojo to the stock markets, which have been in a bit of a tizzy of late. Do you really think concessional tax rate is something that can be seriously thought over?
Well, the reports one hears is that this is one of the proposals on cards, although the tax rate is probably going to be higher at 18% versus when it was 15% in 2019. Look, the government had done concessional tax rates before, and the idea was that it would lead to a lot of private investment. And instead, private investment so far has been relatively weak. But that said, I think we are also sort of in a post-Trump world where there is likely to be trade tensions between US and China, which means that companies will be looking for alternate destinations. And I think it is absolutely necessary for India to be there in a wicket-keeper's place to get that catch. And to go and get that catch, what you need is to have good ease of doing business, attractive tax environment. And I think that's where all of these policies may be coming from. The other thing which they are also talking about is correcting inverted duty structures. So essentially, it's the case that duties might be higher for final goods and lower for inputs, it was higher for inputs and lower for finished goods. So which means that it's more expensive to get inputs, and then you have to face competition as a final goods producer. So correcting the inverted duty structure could also be another way to kind of boost manufacturing in the country. But yeah, it seems that this could be one of the focus areas.
All right, but Auro, apart from the kind of the number crunching that we just did with you, one of the buzzword for this budget, any sense that what it could be? Because we were just analyzing some of the words that were used very quite often in the last year's budget. Some of the words were like employment, energy, and infrastructure. These were the key themes that actually turned out, and employment was a bit of a surprise wherein a lot of focus was there. But this time, any sense that what could be the buzzwords?
Well, I think the buzzword that I am always alarmed with in the budget is this big bang budget, right? Because no one knows what the big bang is, but everyone talks about a big bang budget. Look, you're right. Employment is going to be a focus area. I think it'd be a good idea to know what has happened of the employment-linked incentive schemes that were started. It's probably getting fruition now. So, one could, assume that in the budget, these employment initiatives get more allocation. So I think a budget sort of focusing on middle class, focusing on manufacturing, focusing on employment. I think these are focusing on renewable. These should be the major themes of this budget.
Let's see. We'll get to know on first at 11 a.m. as to what the key theme is. Thanks so much, Aurodeep, for making time and speaking with us.
If you like this video, then like, share and subscribe to ET Now.